In today's video, we are going to talk about the top 5 blue chip companies you should be investing in during this lockdown period. I am Varun Agarwal and let's get started. The first company is Reliance Industries. As you know, this is one of the biggest companies in India. There are few stats I have listed down on the screen for you to understand why this is the most recommended one. The last trading price of this is around 1200 rupees, and 52-week high and low is about 875 to 1600. The 5 years trend, the price of this stock has a 5 years uptrend. The PE ratio is around 21. Industry PE is around 14. The price book ratio is around 1.91, which is quite less. And the revenue and profits both have been consistently increasing over a period of time. The debt is high, that's the only weak point. But overall, if you see that this is one of the most recommended ones, as it is the biggest company in India, and it is available at a very good valuation right now during the lockdown. The second company which I recommend is HDFC Bank. HDFC Bank is now selling at around 925. The 52-week high and low of this is 738 to about 1305. 5 years, the share price has been consistently increasing. The P ratio of this script is around 20. Industry P is around 25, which is a good sign. The price book ratio is around 3.4, which is quite reasonable again. Revenue and profits both are in uptrend, and since this is a finance banking company, obviously debt would be high. So this is the second script which you can invest in for this lockdown period. The third company which we can invest in is ITC. ITC is into various types of industries, and there are a lot of products which this company sells in popular brands, and it is currently selling at around 185. The 52-week high and low is around 134 to 310, which shows great chance of increase in profits. 5 years, it has been consistently maintaining its price, or it is slightly up in trend. PE ratio is around 15, industry PE is around 17, price book ratio is around 4, which is again acceptable. Revenue is consistently maintained, profits are in uptrend over the several few years, and debt is very less. This is again a strong signal, as debt is very less in ITC. The next script which we should be buying is Bajaj Finance. This is currently selling at around 2500 odd rupees. The 52-week high and low is around 2000 to 5000 range. The 5 years share price has been consistently increasing. Whenever I am saying in the video that consistently it has been increasing over the 5 years, this is subject to the recent downfall during the lockdown. So we are looking at scripts which are fundamentally strong, which are consistently increasing, but only due to the lockdown period there is a sudden fall in price. So PE ratio is around 30, which is slightly high but still acceptable. Industry P is around 24. Price book ratio again is 7.87, which is slightly high, but still it is a good buy. Revenue and profits both are in uptrend during the last few years, and debt is high because it's a finance company. So Bajaj Finance, if you see, there is a huge potential in growth if you buy it at somewhere around 2000 odd levels. The next and the last script which I recommend is around Larsen and Toubro. This is presently selling at around 812 rupees. 52-week low and high is 661 to 1600. You see there's a huge gap and a huge potential to go up. The 5 years price is an uptrend and the P ratio is 16, which is reasonable. Industry P is also 16 or 17. Price book ratio is about 2.18, which is again very reasonable. Revenue and profits both are in uptrend, and debt is decreasing, which is again a good signal. So in this, we have selected only the top few companies in India which are fundamentally very strong, which have very low risk, and which have huge potential to go up. Whatever I am saying is only my suggestion. Whether you invest and what level you invest is up to you. Whether or not you invest is again up to you. This is just for the sake of discussion purpose. We are discussing the fundamentals and the chances of increase of prices in these companies. Now, when we have shortlisted a few companies, I would like to advise how to get into this buying. Investing strategy would be buy on dips. Whenever the prices are falling, you start buying them. Divide your investment in about 3 to 4 parts, and as and when the prices are falling, you keep averaging it. Why I am not recommending to buy at one shot is because there is a lot of uncertainty still going on in the market. People don't know when the lockdown is going to be removed, and it will take some time for the companies to get back to the normal operations. And the due to lockdown in the recent Q4 results also will be affected. So there is a chance of lot of volatility in the market. That's the reason why you should not be buying at one shot. You should enter into the script at a decent level, and you should try to average your price, your cost as and when you go further. Once you get into it, you should hold it for at least 6 months to 1 year so that you get good, ample returns on your investment. So thank you for watching this video. If you like the video, you can hit the thumbs up button. Do subscribe to my channel. This will encourage me to create more videos. Hit the bell icon to be sure not to miss any new video on my channel. And which is your favorite script among these 5 companies? I want you to comment below, and I would read each and every comment of yours and reply to it. So, what is your favorite script? Do mention in the comment below. And if you have any further questions, you can leave the comments, or you have any suggestions on which topic I should create more videos, you can leave those suggestions in the comments below. So, thanks for watching and have a great day.